From the floor of the CME Group, this is Danny Riley on today's Cash Close. Sorry, I've been offline. We had the boot camp, and then I've been doing the Periscope and trying to trade, and no one really cares about that. But the name of this video, bring back the PPT and say hello to global negative borrowing cost. The high of the day in the S&P came in at 1877.75 at 9:30 in the morning. The low came in at 1843.5 just now, or a little while ago. And last, on the 245 cash close, the S&P is trading, 1849 quarter, and we're just about unchanged or a little higher on the day. Nothing real big here. Total volume, 2.4 million minis trade, 8,000 big S&Ps trade in the pit. The MIM started showing decent size to buy, crept up like to 500 million to buy, and the actual MOC came out by 680 million. Tomorrow we've got the jobless claims number. We've got part 2 of Janet Yellen speaking. At 9 o'clock Central Time, we have the EIA natural gas report. We have a 30-year bond auction. We have the Fed balance sheet. And we have money supply. Whoosh! Got that out of the way. Now, what's going to happen here? The S&P acted terribly today. It rallied up. Again, all the buying power used up early in the session. Came down from the latter part of the day despite a big MOC buy of 680 million, which I want to remind everybody, the mutual funds, despite the weakness in the S&P, have been buying on every day since the last trading day of January, when they bought $4 billion on one whack, or $4.4 billion, or whatever that was. But that's really not what's messing with the markets right now. Is the world is awash with cheap money and an overload of crude oil. And into all that is just all this extreme volatility that markets just can't seem to shake off. Now, adding to that volatility is the yen carry trade. It was supposed to be like, quote unquote, quote, a safe haven. And today, I think the yen was up 130 pips. And I think it may have reversed when Yellen spoke, but I think what's happened here is it's the unwind of the yen carry trade that is now into its second straight week of outflows, and it's now sitting on a 15-month low. That's the USD JYD spread. That can't be good. Japan's in huge debt. They've got enacted negative borrowing rates, and what's happened since then, since China's gone on holiday, the Nikkei has fallen 6.5% and is down almost 18% year to date. So I think you got to be a little concerned about the overall price action here. Big failed rally today up in the S&P. Never could regain its highs. Sold back off late in the day. Had a little bounce, but not much after going into the final minutes. But at the end of the day, I got this eerie feeling that, China comes back online this week. They see that the Nikkei has dropped this much. There may be a little catch-up on the downside here. So we've had a little vacation here while China's been closed, but that may come to an end rather quickly here. That said, you guys, I still think 1820 is a critical support on the downside, and I think that 1880 is your resistance. But who knows? Maybe we're just stuck in this range here. But I think the longer it sticks in this range, the more likely it's going to explode out of it. I kind of thought it was going to go up a little bit today, but it went down. And the last part of this is we're looking for the Pitbull's Thursday, Friday low here. But very, very low expectations about the February options expiration. According to the S&P cash study for the February options expiration, the stats are some of the weakest that we've seen in quite a while. I think Tuesday's your only update during the week, and everything else is kind of mishmashed to negative stats. So I think going into this, you kind of got to be careful. I'm going to leave it like that, you guys. I'll see you tomorrow. I will do one tomorrow on the closing print. I'll do another closing print, but I'll see you tomorrow on the opening print.